Hello and welcome once again to the Smart Money, Dumb Money Show. I'm your host, as usual, Keith Richards. I am President and Chief Portfolio Manager at Valuetron Wealth Management. And I'm a technical analyst, as you guys probably know. So we're going to look at charts. What else is new? And we're going to be looking at a chart that's just broken out. And I have been invested in this particular sector, if you want to call it that, for a while. And I'm very pleased to see that the breakout has occurred because it's one of the sectors that I've liked for several months now. There have been a lot of fundamental factors that Craig and I have looked at leading into this breakout, and the breakout just confirmed everything we believed. We were buying it at the bottom of our trading range at the time. You probably know my rules. You don't buy assuming a breakout, but you can buy at the bottom of a consolidation pattern, because the worst that could happen is you sell it near the top of the trading pattern. So we're kind of very happy with this trade, but I think even for new investors, there's a ton of exciting opportunities now because of this breakout. So let's take a look. And what we're going to be talking about is the emerging markets. So emerging markets, you guys should know, and I'm just going to pull up the chart. Emerging markets is a broad term. It's not one particular market. It's a number of different small markets, Taiwan, etc., Korea, Mexico. These are considered emerging market type countries. And they bunched them all into this particular ETF that we're looking at right here. It's the iShares MSCI Emerging Markets ETF. It just follows the MSCI index for emerging markets. I think it's something like 30% of that index. It might be 20, but it's between 20 and 30% of this index is China. And we're going to take a look at China in a minute. But what I want you to notice is that there was a very long consolidation pattern. So if we look back to 2022, there's 22. And since 22, the emerging markets were going sideways. Now, take a look at these peaks, troughs, pretty much exactly the same price peak, and then a decline, and another peak, and then a decline, and one last follow-up, all around $41 or so. All right, and then it just broke out, and now it's pushing $43. So that's a significant enough amount, because I don't really pay attention to breakouts that are just a couple of percentage points. I really like to see about 3% of the market move or more. And actually, if you've ever read any of my books, this one in particular, Sideways, I talk about rules like that, such as the 3 and 3 rule. Ideally, a 3% move, ideally a minimum of 3 days up to 3 weeks before you buy on a breakout. So we've had both those. We've had more than 3%, and we've had about 3 weeks. We're into the third week. So I think this breakout is legit. And I think that there's a ton more upside. And the reason for that is if you look at resistance coming up, you do have a little bit of resistance way back from 2020 around current levels, but actually it even seems to be taking that level out right now at this moment, if not close enough. That was a very momentary point in time. It wasn't like this resistance where it would hit over and over and over and fail. This was just one moment back in 2020 before the COVID collapse. So what we're seeing right now is a lot of space up here for the emerging markets. And you know, your choice is as good as mine as far as where the targets could be. You could maybe think that it'll land around an old support level, $45 or so, which isn't much ahead, but I think there's not a lot of time spent at that old support, you know, possibly new resistance point to suggest it would be a major resistance point going forward. I think, in fact, you're not going to see much resistance until you see this point, which was a very strong support level as it made its topping formation back in 21. And that level, as we draw along the chart here, is $50. Well, I'll take a move from $43 to $50 any day of the week. Thank you very much. So I think there's lots of room. Now, keep in mind that a big chunk of this index is China. China has its issues. You've heard all about the real estate problems, but China has one thing And I will not quote Justin Trudeau, who you guys probably know how I feel about him, but one of the things he did say was that he admires communism. And he's certainly shown his cards in Canada, invoking some of the more communist type freedom restrictions, such as freedom of speech recently in his newest bill. But I won't get into that. One of the things the Chinese do is they are a communist regime. They just step in and get the job done. And that's what Trudeau was alluding to, is that, you know, they don't have to go through a diplomatic process or a democratic process. They just go ahead and do what they want, the government, that is. And so if they want to change monetary policy, if they want to, you know, support real estate, whatever they want to do, the government will just do it. And there's not going to be any debate about it because they're the boss. So there's a good chance that this breakout, which has been occurring because of some stimulus of late in China, will bring us back in price to near $50. Okay, so let's take it a closer look then at China. So this is the China index. This is the actual index, is not an ETF, and you can see it's still stuck in its sideways range. And so, you know, you're still obviously seeing that it was some of the other countries within that emerging markets index that really caused the breakout. Nevertheless, China's index is bumping up against technical resistance. And I talked about this in a recent blog. Again, I own some Chinese ETFs and one individual stock in our value trend equity platform, as well as our aggressive platform. We were buying down here. We believe that the index will eventually break out because of what I was just talking about. If the Chinese government wants something to happen, they make it happen. So I think that we're going to see a breakout, and there's lots of space up here. If we call this old support level here as our first target, that's about 350. It's currently trading at 244. Now, if you're disciplined, you're going to wait until you see the breakout. You can see that the MACD and whatnot are pretty benign looking. They're flat, so there's not really a lot happening just yet, but I think the potential is there on this trade. So let's take a look at another factor, and I just want to actually skip past this chart for 1 second because it's going to be the same chart. This is the Wisdom Tree Emerging Markets Currency Strategy Fund. What they do is they basically just buy emerging market currencies and T-bills, okay? And this is basically a take on the emerging markets stock markets and how the currencies are doing within those markets, and the two work together. So when you were looking at the emerging markets ETF and the Chinese ETF, you'll see that there's kind of a similar pattern, not quite, but you'll see that there's this big sideways period. So we're coming into a lid that this market has seen before. Now this lid is much longer than the recent patterns on the emerging markets ETF and the Chinese ETF. They were only really since about 21 or so. We're going way back where there's been this giant lid and giant swings in the currencies, because again, there's lots of different currencies there. Some of these currencies have been strengthening up, I know for a fact, based on some, encouraging political leadership changes. And as well, keep in mind that the emerging markets, not all of them, but a lot of them are producers of metals and materials. Well, guess what's been moving lately? So their currencies are moving up. So what I'm going to suggest here is that there is a big lid on this ETF, which suggests there's a bit of a lid on the emerging markets currencies. But if that rough area of, let's call it 18 to 18 and a half, are broken on this ETF, then you've got tons of upside. So if you believe that metals and minerals are going to continue being good for the next few years, even if they do the odd corrections, which every sector and stock does, you'll see a breakout on this index, and that can only add to the case for emerging markets. So I want to then go back here and take a look at a chart of this same ETF, which is the Wisdom Tree Emerging Markets ETF, and that's this black line here. And then this is the US dollar. And what you'll see is that this has been an ongoing relationship, just like gold has had to the US dollar. And that is that there's only a couple of things that you would buy as a hedge against the US dollar. If you felt the US dollar was going to fall and you had a large, say, US dollar portfolio, even if you're Canadian, then you might want to own either gold or emerging markets currencies or both, just as a hedge, because you can see there's an absolute negative relationship most of the time. I mean, nothing's perfect, but take a look. The emerging markets ETF, the currency ETF is moving up and the US dollar moves down and vice versa. It's the differential is quite obvious. And if we flip down the chart here, this is a correlation line. The lower this line, the more negatively correlation they are. And you can see this is, if you on the right hand side, this says -1. So if this line was always here, it would be exactly -1. It would be exactly negatively correlated, the two between the emerging markets and the US currencies. Well, you can see this relationship does spend most of the time around -1 or -0.75 or so. They are most certainly negatively correlated to each other, anywhere between, like at the very worst, you've never even seen a positive correlation. You see not even quite zero correlation, but almost all of the time about -0.5 to -1 in relationship. So you have a very, very good hedge against the US dollar. So another argument for maybe holding it as a diversification factor, particularly if you are concerned about the US dollar, because if the US dollar falls, you're going to see this ETF pop, simply because it's a go-to for currency movements. And again, because these guys are largely very invested in materials production. So keep all that stuff in mind. And this is the relative strength against the US dollar. And you can see it's been flat of late, but it was declining. And now it does seem to be, at least on the uptick as far as the relationship of performance of emerging markets currencies against the US dollar. So I hope all that helps. I am a believer in diversification. So we like to put many different factors in our equity platform to help us outperform the markets. And if you take a look at our performance, which is available online, I think you will find that that statement is accurate. We have been contrarian investors for almost all of my career. And I can tell you that this was a very contrarian trade when we started buying China and emerging markets a number of months ago. And sometimes that's just the way you got to think. So I am a believer in the emerging markets. Yes, they can have pullbacks, but I think there's an argument there for someone with a bit of patience to make money on some sort of emerging market strategy. Never put all your eggs in one basket. Never put too much of anything in your portfolio. So I would suggest that if you are interested in this trade, you stick with a very conservative allocation and leg in over time, because it just broke out and that breakout could fail. That can happen. So mind your stop losses, mind your strategy for legging in rather than just dumping a bunch of money in all at once, and mind the allocation that you plan on building up to. I talk about this stuff in my online investment course. I highly recommend you take the course. It's not much money and it's very thorough. It's an A to Z trading program. So I hope that many of you watching this have already taken the course and you'll understand what I'm talking about with strategizing around the structure of your portfolio and how we buy and sell. I talk about all that stuff as well as many other things in the course. So I hope all that helped. I think the emerging markets has some potential, and I can say our money is where our mouth is. We don't own that particular ETF, but we own other securities surrounding the same idea. Hope that helps, and we'll see you in a week.